All financial markets are volatile. Hence, we have a rule inside the Masterclass, Rule 252, prepared, not scared. You want to harness this volatility in your favor. In this video, we'll look through how to embrace the chaos inside financial markets. This is an absolutely critical skill to have as either a trader or an investor. Hi everyone, I'm Ken from CryptoTradingKS, aiming to boost your financial and emotional success. With 30 plus years in financial markets, I share exclusive content for market success. Subscribe for game-changing insights. Let's run the numbers. Due to the Federal Reserve increasing interest rates at an unparalleled rate, incredible strain has been put on the banking and financial system. Regional bank shares plunge on fear of more rescues to come. We saw Western Alliance Bancorp down 15.12%. PacWest Bancorp came down 27.78%. The banking sector has been adversely impacted by the increase in the federal funds rate, as we've seen recently with First Republic Bank. Many people think that the Fed can simply not increase the federal funds rate again, but currently, with less than a day to go before Jerome Powell gets in front of the world and releases that rate, there's an 85.4% probability of a 25 basis point increase. This is currently sending shockwaves through the main markets. Today's video is getting prepared and not scared. The greatest investors and traders that have ever lived say that the safest time to invest is when there's blood in the streets, even if it's your own. Warren Buffett has said many times, be fearful when others are greedy, and greedy only when others are fearful. People are becoming very fearful. It's time to get greedy. Some of the greatest success stories in financial markets never said run away from the market when the market goes red. They said run into the market when the market goes red. This is an extension of Rule 130. Make volatility your best friend. You must have rules when it comes to financial markets. And those rules take many, many years to acquire. One of the first ways to get prepared and not scared is to do your CTKS code each and every day. If you're entering panic right now and saying, I don't know what to do, you can avoid this in the future by doing your daily three-dimensional risk management. Always assume the market is going to go against you and assume that first. When you do this three-dimensional thinking, the market becomes much, much clearer and has a lot more clarity. We're geared by human nature to run when it goes red inside the markets. You must fight against this natural human emotion, but you cannot gamble. You need knowledge. Let's just zero in on JP Morgan and look at this sell-off. This is the COVID and US liquidity crisis. What happened to JP Morgan's price? It fell, and it fell dramatically from about 113% up all the way down to around 17% up. That is quite a fall. A lot of people would be selling on the way down. They wouldn't be thinking about buying. If you know how to be prepared and not scared, how to make volatility your best friend, you can get in on opportunities like this, and the outcome is just magic. Let's zoom in on JP Morgan's price. If you were unfortunate enough to be buying all the way down or just focusing your buying, JP Morgan came down 44%. But what happened after that? It went up nearly 118%. Crashes, booms, busts, they're always on the cards. This is just part and parcel of financial markets. Making it work for you is something else entirely. Professionals think in terms of the 10-5-10 fund. They're not panicked and they don't get angry when price comes down or moves against them. Actually, they get greedy. There are 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth and positive excellence. The panic zone. When people first get into the markets, they're absolutely panicked. They get fear, uncertainty, and doubt, which makes them sell, or they get FOMO, fear of missing out, which makes them buy. Either way, they end up getting really angry. This is the time where people can learn and turn into a diamond through diamondization. They don't have diamond hands, they have a diamond mind. A diamond mind is very, very important because we want to think about how to actually make money. But making money is not enough. You need to keep it. That's where Zone 4 comes into play. As a community, we're a Zone 4 community. Literally everything that people are told when they enter financial markets is the opposite of what works. It takes a really long time for people's attitudes to turn around. You must have a specific structure. You must know your foundations. You must know how to look at global markets, then hone in to the market that you're interested in before you buy and sell. And there's so many ways to do that. You must master emotional control. When you see prices coming down, for example, like this, and many people live through this in financial markets, what were you doing? Were you running away and saying, I'll never get back into the markets? And what happened next? You may have said, I'm out. I have no interest in financial markets. I bled too much. That is a common phase for everybody to go through. But what actually occurs, people get pulled into the market when it exceeds where they actually exited, and they generally buy near the top, and then they get caught again. This is the series of waves that plays out. You don't want to be part of that. You want to be part of the other crowd that buys when there's blood in the street and sells when things are going really, really well. Both things are very, very difficult to do, but they can be done. Many people say that they're investors and they're right into dollar cost averaging, but when the markets turn red, they flee, they run. If this has happened to you, it's very, very normal. We're programmed on the red to run away and on the green to go in. You must inverse your programming. You remember when JP Morgan sold down, Apple sold down around 31%. You can see a very different picture with Apple. Apple recovered from that 31% drawdown and went on to rally over 220%. If you're on the right side of the percentage, you will win, no doubt about it. But unfortunately, what happens is that most people, after witnessing a big sell-off like this, they get really, really burnt. They leave the market, and they might come back into the market when they see things going parabolic, when the news headlines are full of really, really positive messages. And what happens? They get onto the wrong side of the percentage. If you're in something good, just stick with it, but make sure it's good. It's critical to be able to do your three-dimensional thinking, and what I've done here is put a little bit of a path up for the next week, a bullish case, a consolidating case, and a bearish case for the S&P 500. We can see currently the S&P 500 is heading towards the bearish stance. The S&P 500 closed out at 41.19. If you're a student of the CTKS method, you already know that the S&P 500 came down to a smart money buy area from 41.03 to 41.11. This is like a safety net. When it drops from one level, it will hit another level and slow down and potentially reverse. That's what we're looking at inside market structure. And if you don't understand objective dynamic market structure, you will not know where things can turn around. We can see at the same time gold is following the bullish path and projection. Gold is currently 2016, and you might notice that gold just popped up into this smart money sell area between 1997 and 2006, and it was rejected down to the lower smart money buy level. It needed momentum to get through it. It's actually facing another smart money sell level from 2017 up to 2026. Masterclass students, don't forget, and CTKS Method students as well, don't forget to remark up your charts. Bitcoin has a potential flight to safety from the banking system built into it. It's currently 28,778. And what's happening with price action? There is still bearish momentum, bearish to consolidating momentum inside the crypto market. How have the safety zones actually checked out? We know that there's a safety zone, a smart money buy area between 27,877 and 28,174. Price came down to that after being sold down quite heavily, consolidated around, and is starting to move up. The next smart money sell level is from 29,171 to 29,291. All markets are intercorrelated and interconnected. We saw a spike in the VIX, and Masterclass students, you get my live chart in TM6. The spiking VIX means negative pressure or momentum on the major indices. We can see that the main markets are worried about the banking system. This has sparked a rise in bond prices and a fall in yields, which is a little bit counterintuitive at the current time, because the FOMC meeting will in all likelihood raise yields and the DXY. You must be able to articulate and understand how all these charts relate to your favorite chart. That's part of being prepared. The more knowledge you have, the more prepared you are. We can see also that the DXY is starting to curve around. What you will see typically, the mainstream media will get right on the tail end of something. They'll say the world is de-dollarizing. You'll read it everywhere, and the dollar will just rally. You've probably seen it in oil. When oil was up around $120 a barrel, they were saying oil is going to 240. They marked the top. News tends to mark the top and the bottom of different price action, so that's why you do your three-dimensional risk management. For example, if you were looking at doing gold trading or gold investing, you need to understand what could be the bearish, the consolidatory phase or the bullish phase for gold, and price action will actually tell you where it's going to. You can actually sit back and let price reveal itself, and you know what you're doing because you've already done your three-dimensional risk management. If you were looking at the S&P 500 and wanted to figure out where price could go, you have your consolidating path, your bearish path, and your bullish path, and you let price reveal itself to you. The key in doing this is to be prepared. What if you saw a climactic sell down or a climactic rally up? That would indicate the market's attention is in one direction or another. Doing conservative estimates is very, very powerful. The way that you could get prepared and not scared is to understand the financial markets are always moving in a wave. A lot of people in Zone 1 and Zone 2 only have one position. It's either going to zero or it's going to the moon. It's more important to have three dimensions in your thinking and just be reasonable about what you think will happen and have good reasons to support that. The projections that I do are based on Stanfield lines, SLs, and Stanfield zones, SZs, but more particularly the SLs. SLs form normal structure inside the market. They can be very, very powerful. To get prepared and not scared, you must know what you will do if price just falls off a cliff, if price rallies like a maniac, and it can do either one at any time. It's critical not to get caught in one-dimensional thinking. The price can only go up or it can only go down. Always think in terms of these three dimensions. I hope popping this on the charts actually helps you out. Please let me know in the comments if this is useful to you. One thing I love about the crypto market, the swings and volatility are so great. There's always something cooking and always something interesting going on. When we look at the past day, we can see that quite a few of these tokens are up. When we look at the past hour, they're still up. When we look at the past 15 minutes, they're better than bank interest on a lot of these particular projects. Getting into crypto bubbles can be a really interesting thing to do. And remember, yesterday the crypto market was really, really red, but I said have an opportunity mindset. Always look for the opportunity. They are always there. The only way to get prepared and not scared is through knowledge. You must become an active and avid learner. Active learning is the key to your success. You must know what all of this means. For example, if we look at the past 24-hour percent gainers, we can see Stacks, Rocket Pool, Optimism, Synthetics, CRO. Why are these ones moving up? If we look at the 24-hour greatest losers, Render Token, EGLD, BNB, Flare, VET, HPAR, APE, why are these ones moving down? You want to search for answers to those questions, and you won't find it in the media. You'll find it in the charts. Masterclass students, remember your grouping training. The past 4 videos, and thank you everybody for your very kind comments. I'm so grateful and appreciative that they're helpful to you. Those 4 videos give you little pieces of the jigsaw puzzle. We can see when we turn to liquidations, 45 million across 12,849 positions. This is incredibly low. That's like a weekend liquidation level. And when we look at 24-hour total liquidations, we can see about 68% short. When looking at 12 hours, we see more, about 73% short. What about on 4 hours? A little bit less, 72% short. And what about the past hour? Wow, they're going for it. The shorts are really getting whacked around, 94% short. But you can see that it's relatively low volume in comparison to what happened the day before, but it is sufficient to move price. When looking at the longs and the shorts, and this is something that we do inside TG34, we can see the number of Bitcoin margin shorts is starting to roll over, and the number of Bitcoin margin longs is starting to come up. We've seen a lot of short liquidations and a lot of long liquidations as well. It's really choppy heading into the FOMC meeting. There were so many fantastic comments in yesterday's video and the days before that as well. I just want to let everybody know how much Kate and I appreciate you all. When looking at the top 8 crypto projects, we notice that Bitcoin's gravity is very important. Ethereum is moving in alignment with Bitcoin's gravity. XRP has become a little bit weaker. BNB is strong, but it's coming back to realign. We know that the strong become weak and the weak become strong. What about ADA? Just a little bit weaker than Bitcoin's gravity. Doge is considerably weaker at the moment. What is this pointing to? It's actually pointing to a flight to safety. People are putting their money into Bitcoin rather than the other projects at the current time. What about Matic? Matic is increasing in strength, but Bitcoin is doing better. What about Solana? Exactly the same. What we can actually ascertain from this is an active learning lesson. Bitcoin is currently acting as a flight to safety. One thing to keep in your mind, if you find yourself in Zone 1 and Zone 2 or Zone 2, don't be at all concerned about it. It's things that we all go through. We all go through Zone 1 when we start. We all go through Zone 2 when we start. Getting into Zone 3 and Zone 4 is a different thing. Not many people get into Zone 3, and even fewer get into Zone 4. Why is that? Because you must learn to move from the lose money rule zone into the make and keep money rule zones, Zones 3 and Zone 4. If you want to become truly successful in anything in life, make learning your focus on that particular area. And if you're doing something, do it to the best of your capability always. It doesn't matter whether you win or learn. Note, I didn't say lose, because you never lose if you're learning. We could see a lot of increasing volatility inside the market. That's why your mindset is so incredibly important. If your mindset is not prepared, the rest of you will not be prepared either. Please let me know in the comments, how do you prepare yourself for negative price momentum? And also, how do you prepare yourself for positive price momentum? Both angles are very important to cover. You're part of this community because you are dedicated and committed. You want to win in life. You want to master yourself and you want to master the market. You do that by either winning or learning and never blaming. Always learn. Always be learning. Understand that this world is for you. Literally, it is for you. It has your best interests at heart, even though it often doesn't feel that way. If you're going through pressure, that pressure is turning you into a diamond. Learning is all about flexibility. Flexibility is something really good to chat about in today's comments. I'd like to thank everybody again for the amazing comments that are on YouTube. Please have a look through. We have such an amazing global family. And if you're new to the channel, a very warm welcome, and you might just want to reach out and say hi in the comments. We've spent some time getting psychologically prepared, but also technically prepared as well. We know that the greatest investors and traders of all time love the red. And that's not because they're going short, that's because they're buying. Professionals are always like firefighters. They're getting their gear on to go into the burning building when everybody is fleeing from it. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.